What's up, guys? It's your boy Alpha Blue, and you're welcome back to my YouTube channel. Today, I'm so excited to be bringing you another video. If you're new to this channel, you're welcome. You're welcome. So, guys, in today's video, I'm going to be showing you how to do your technical analysis, how to analyze the forex market, and how in 5 minutes you can get your bias as to whether I should be buying or selling the market. So, guys, and this is actually something you can use to trade anything tradable, any financial market, be it cryptocurrencies, stock, or indices. As far as it's something that has charts, you can apply this technical analysis technique to trade the market, to trade that particular market. So, guys, if you've been trading for a while now or you're a beginner, I guess by now you should know that analysis comprises of two kinds of analysis. When analyzing any asset, there are two kinds of analysis. There's the fundamental analysis and there's the technical analysis. So fundamental analysis is basically when you use the news or economic events around the world to predict the next movement in price of an asset or a currency or a stock. While technical analysis is when you're using just the charts, you're using just the information you're getting on the charts, the candlestick formation, and all of that to predict where next price is going to go. So in this video, I'm going to be showing you strictly just technical analysis, how you can use technical analysis to do your analysis. I remember when I started out trading, one of the things I found really confusing was how to do my analysis. After I opened up my chart, I was just always confused. I didn't know what next to do, whether I should be buying or selling. Everything was just looking confusing, candlesticks everywhere and all of that. So in this video, what I'm trying to do is to simplify everything for a beginner, show you what next to do so that you're able to know how, whether you should be buying or selling the market that you're trying to trade. So, guys, let's dive right into it. So let's say you open up your chart in the morning, you're about to trade, you're about to start your technical analysis. There are basically four things that you should be looking at while doing your technical analysis. So your technical analysis should comprise of these four things, and these four things will actually help to guide you and give you a direction, or give you a sense of what next you should be doing. So the first thing is you want to determine the trend in that market. Then the second thing is um, the first thing is identifying the trend of the market. The second thing is identifying horizontal key levels of in that market, and these are levels of support and resistance. These are key horizontal levels in the market. Then the third thing you should be doing is you should be waiting for price to get to that level. Then the fourth thing is you wait and see how price reacts to those levels, and then you follow the trend, so these are like the four basic things that you should be doing in your technical analysis. And as you continue to learn, as you continue to get more knowledge, gather more knowledge, you can now continue to add to this and then refine your trading method, and then get become more consistent in your winnings. So let's dive right into it. Let me show you different charts. I'll be analyzing at least like two different markets or charts so that I explain this method to you and you understand what you should be doing. So first thing first, if you want to start your technical analysis, you should always start out on the higher time frames. You should always start your analysis on the higher time frames. Why should you start your analysis on the higher time frame? That's because you want to get the bigger picture of what's going on that market. You want to see what price have been doing. You want to see the bigger picture of what price has been doing. So you want to see where price has been going for the past 1 month or 1 week or days, where price has been heading to. So it gives you a better picture of what's going on. Unlike when you just start out on a small time frame, on maybe 1 hour time frame, you just kind of see what happened for just the past few hours. But when you're starting out on the higher time frame, you get a bigger picture of what price has been doing for a long while. So uh, that's how you should always start out your analysis. So you should start your analysis from the weekly time frame to the daily time frame to the 4 hour time frame to the 1 hour time frame. Then you go down to the smaller time frame, the 15 minutes, the 5 minute time frame to look for your entries. So that's how it should always be. So on this particular asset, this is crash 1000. This is a synthetic indices that's offered by Deriv, a broker Deriv, and I will attach the link if you want to sign up with Deriv on the description of this video. So this is crash 1000. Let's say I want to start my technical analysis. I want to analyze this market and get my bias. The first thing that I am going to do is to head on to the higher time frames, as I just told you, and this is the weekly. And that was the first thing I want to establish. I want to identify the trend of this market. I want to know what this market, where this market has been going, what it has been doing. So I want to know whether it has been going up, has it been trending upward, or has it been trending downwards. So that's what I want to establish. And as a beginner, you should always look for trending markets. You shouldn't stick to markets that consolidate. So once you check on the higher time frame, the weekly, the daily, and you see that the market is in a form of consolidation, then that's not a market you want to trend, because it's more difficult to trade to trade that kind of market. So you want to look for a market that is trending. So in this case now, I'm on the weekly time frame. As you can see, it's clearly on a downtrend. It's clearly on a downtrend. It's clearly on a downtrend. This is a very smooth downtrend. Let me go to the daily time frame. As you see, the daily time frame is also on a very long it's on a long downtrend. It has been downtrending for a while now. So the first thing I want to do is to determine the trend, and I've determined that this market has been on a downtrend. This market has been on a downtrend for a while, so I have that in mind, and that alone is already beginning to shape my bias. So right now, what I'm going to be looking for next is horizontal key levels of support and resistance. Okay, so even on the higher time frame, after you've established the trend of the market, what you should try to do now is to see if you can connect a trend line. See if you can connect a trend line. This trend line will help to serve as like another it will help to serve like more confluence. So it will be an area whereby you'll be looking out for, in case price gets to that trend line. Anytime price gets to that trend line, you'll be looking for a trading opportunity there, because for because the previous movement in price, the previous price action, anytime price got there, price reacted to it and continues going down. So that's what you'll be drawing a trend line, so that it will help you, just give you more confidence in case price gets to that place next time. So let me delete this arrow. So now that you know it's a downtrend, the next thing you want to do is to see if you can connect a trend line. So let's zoom and see. Now let me see. I'll connect a trend line here. Yeah, so this is a trend line. We have 3 touches on this trend line. The first one up here, second one in the middle here, and the third one here. So now this is a downtrend. You have a trend line, and because the market has been trending downwards, you know that anytime the price gets up to this trend line, you should expect to see that sellers will step into the market and push the price back down. So you'll be looking for sell opportunities anytime price gets to this trend line. So after you've established the trend, you are able to get a trend line drawn. The next thing you'll be doing is to try and look for horizontal levels in this market. So let me look for horizontal key levels that can act as levels of support or resistance. So I can see a horizontal level here. I can see a horizontal level there. I can see another level. For this time frame, let me just draw this one level. I can see another level just below, but then I will leave that for other time frames. So if you're able to find a horizontal level on this time frame, good, you can draw that. But the basic thing you should be doing on the higher time frame is to determine the trend. If you can connect a trend line there, fine, you connect. So the next thing to do is now to find horizontal levels, and you're going to be going down to the lower time frames and be doing the same thing. So it's basically like scaling down to the lower time frames and still looking for more horizontal levels that act as levels of support and resistance. And you also be looking out for trends, for where you can connect a trend line, because you just want to refine this to the lower time frame so that it gives you a better chance for to get an entry, because there you get to see where price is at currently and how price can get to these levels, and you get an entry. So from the daily, you go down to your H4. So this is the 4-hour time frame, and then I want to also look for horizontal levels on this time frame. I want to also look for horizontal levels. So let's see, this here will act as a horizontal level. Why? Here you see the price came here, touched it and went up, acted as a support here. Let me show you. Acted as a support here, acted as a support here, acted as a support here, broke it here, acted as a resistance here, acted as a resistance here, came here, acted nicely as a resistance. See how price just touched it and went back down. So that is a very strong horizontal level that I'm going to mark out and keep my eyes on it, that can serve as a potential point of getting an entry. So after you've marked out your horizontal level here, you will also go down to H4 and try and see if you can find more horizontal levels or support and or levels you can draw your trend line to connect to, so that it will serve more as like areas where you'll be looking for entries. So this is H1 time frame. So now, if you've identified the daily trend or the trend of the market in general, you've identified that trend. In this case, it's a downtrend. Now you're only going to be looking for sales in a market that is trending downwards. As a beginner, it's good to stick to very simple techniques. Then as you continue to learn, you can now start trying out many other stuff. But this will actually help you to stay out of bad trades, and it will even help increase your winning rates. So now in this market, I've identified that the market is selling, is on a downtrend. So I'm looking for only selling opportunities, and I've been able to mark out my horizontal levels, of which is this red horizontal line. Let me draw a rectangle. This is a very key horizontal level I've been able to identify on H1. So what am I going to do next? The third thing is for me to wait for price to get to these key horizontal levels. Another level I can mark out here is right here. We have another level here. As you can see, price got there. Let me show you. Price got here, acted as a support, went back up, came here, acted as a support here, went back up before it broke it here, and then so at least this is giving us some kind of level, so you know that if price gets back to this place, we can expect to see some form of price action. So now, after you've marked out your horizontal levels, what you should be doing now is to be waiting for price to get back to these levels. Then you see how price reacts to that level. Then the fourth thing is for you to follow the trend. So in this market now, market has been downtrending, so I'm looking for only sell opportunities. Then I've established my horizontal levels. Now look at where price is down here. I'll wait for price till price comes all the way back to this horizontal level. If I'll wait to see that price comes to these levels. Then I'll see how price reacts there and look for sales. I'll wait to see that price comes back to here or here. See how price reacts to this place. If it starts showing signs of rejection, giving me rejection wicks, then I'll look for selling opportunities. If it breaks it and comes all the way to this place, this is a very strong level of resistance. Why? Because price acted as a resistance here, this level acted as a resistance, resisted price here and here. So if price comes back to this place, it's a very nice place for me to look for sell. Why? Because that is a strong horizontal level of resistance. And look at the trend line also, guys. Look at the trend line. There's a trend line there that if price gets to, it's more confluence, so it's giving me more reasons to sell at that level. So you see how just this simple technical analysis technique can actually help you get buyers. So the only thing you need to do is to be very patient, wait for price to come all the way back up here, then you look for opportunities to sell. Now another thing you can do is to go down to the lower time frames, go to 30 minutes, check out the 30-minute time frame. If you can see more levels, horizontal levels that you can mark out to anticipate or expect that price will respect and give you a trading opportunity. So you go to 15 minutes. Let's go to 15 minutes. Now this is the 15-minute time frame. So what you're going to be doing after you established the trend of the market on the higher time frame, the weekly, the daily, the H4, you've established your horizontal levels on these time frames. Maybe you got to see some nice horizontal levels on the H4, on the H1. What you want to also now to you wait for price gets back to these horizontal levels. Let's say price gets back to this place. Now where you look for your entries is on the smaller time frame, the 15 minutes time frame, the 5 minutes time frame. So if price gets to this place, that's where your other technical analysis techniques, or I know you'll be wondering, I've not made mention of things like chart patterns or candlestick patterns and all of that. Yes, now this where your candlestick patterns and chart patterns will come in. You can also use that on the higher time frame though, but for this particular technique I'm showing you this is where your chart pattern and your candlestick pattern comes in place. So when price gets to this point, you wait to see how price behaves. You wait to see those pin bars, those bearish engulfing candles. You wait to see a change in structure and all of that, so that you now get to get your entries. If price breaks this place and comes all the way up to this place, good. Now when price gets to this top level, I'll also be watching out for the chart patterns. If I see a double top at this level, perfect, that's where I want to be selling. That's why I will strongly sell. If I see a double top at this level, if I see a triple top at this level, perfect, I'll be looking for a very nice selling opportunity. You understand? So that's how you use all those chart patterns and all to get your buyers. So that's just it about this technique, how you can use these four keys, these four stuffs: determining the trend, the daily trend, the trend on the higher time frame, establishing horizontal key levels that act as levels of support or resistance, waiting for price to get back to these levels, then seeing how price reacts to this level. If you see rejection, you see price changing structure, giving you lower lows at that level, then you're looking for sales. You follow the trend, it's downtrending, so I'm looking for all-in sales. You understand, guys? So let me go to another pair so I can also analyze it for you. Let's go to crash 500 chart. Now this is crash 500. Let me go to the daily time frame. So as you can see, crash 500 has been downtrending on the daily time frame for quite a while now. It has been downtrending. It has been going down. So now look, this is a downtrend, a very sweet downtrend that has been going on. Next thing is I want to see if I can connect a trend line that can help serve as some form of confluence for me. Okay, we don't have a perfect trend line that can connect to the current price, but still I'll connect this trend line so that you guys can see, I'll see if I can explain to you guys. Okay, I'm kind of finding it difficult. Okay, let's just see, use this. So this is the trend line. As you can see, when price got to this point, it respected. It didn't give us a nice touch, but then we saw price continue the downtrend. It got to this point, continued the downtrend, but in this place, it now broke it. So now the trend line has been invalidated. So even though we still have a downtrend, but for the meantime, what you can do is to look for uh is not to now look for horizontal levels, watch those levels. The more price break those horizontal levels to the upside, then we can begin to see that okay, there's now a change in trend. That means the market may begin to want to buy to start an uptrend because this trend line has been broken. So what will I do next? I'll draw my horizontal levels that act as support or resistance. We have a level right here. Why am I drawing this place as a level? Because look at it, price got here, acted as a support, broke it, came, acted as a support here, acted as a resistance here. And funny enough, right now we're currently on this level. So what am I going to be doing now? Now that our price is back to this level, horizontal level, let me draw a rectangle there. Price is back to this level. So what am I going to be doing? I'm going to be waiting to see what price does. If price begin to give me rejection wicks, shows me some rejection wicks, it means that we may be getting sellers in this market. And then I see that there's a change in structure, then I'll begin to consider selling the market. So now I've established the trend, I've established a horizontal level on the bigger time frame. I'll go down to the smaller time frame, H4. Let's see what's going on H4. So this is H4. This now begins to look as if the trend has changed because the trend line has broken, but then there's this strong horizontal level here. So I wouldn't want to just start looking for buying opportunities in this market, because I want to see if this price respects this horizontal level and comes back down or breaks it to the upside. If it breaks it to the upside, then fine, I begin to look for buying opportunities. It means the trend has changed. But for now, let's just still wait and see what price does at this level. So this is on the H4. As you can see, price is actually giving higher highs and higher lows. So it means that the trend may actually have changed, but we still have to wait and see how this horizontal level holds. So you can still connect the trend line on this time frame from the downside. You can still connect the trend line here. You can still try to see if you can connect the trend line. Okay, sorry. So right now, if I'm connecting this trend line, this is what it looks like, but there's no need to do this because it doesn't, price has kind of like messed up the trend line and there's no really need for that. So let's just delete it. So you come down to H1, look at what's going on H1, then go down to 30 minutes, 15 minutes, still keep an eye on the horizontal level I marked and see how price is behaving there. Let's go to 15 minutes. Now this is 15 minutes and this is the horizontal line, the red horizontal line I drew. And on the lower time frame, you can actually see that price is giving us some lower lows and lower highs on the lower time frame. So it's more like there's a kind of shift of market structure, but I still want to wait and see that it gives me a strong bearish and engulfing candle on the higher time frame, and even see that it breaks some like structure. It breaks structure even on the higher time frame, because right now it seems as if the trend has changed. Remember, the trend line on the bigger time frame was broken. So I wouldn't just rush into this market. So let me analyze one more. Let's check boom 500. Now this is boom 500. First thing, you go to the higher time frame, daily. What is going on here? This market has been trending downwards. It has been on a downtrend. So I'm going to be looking for selling opportunities in a downtrend, buying opportunities in an uptrend. So once I see that the market is trending downward, what next? I identify my levels of support and resistance, my key horizontal levels. If I can't find any clear horizontal level on the bigger time frame, what I'll do is to go to the smaller time frame to establish that. But here you can see that there's a level here, price respected, acted as a support here, many times here, even here. Then right now price acted as a support here too, so that has qualified it to be a horizontal level. So if you can't see any nice horizontal level on the daily, you go down to the H4 and look for horizontal levels there. Now I told you that you're looking for selling opportunities in a downtrend, and we've established a level here. So what I'm going to be doing is to wait for price to get back to that level, then give me signs of a sell. Now start looking for the chart patterns, looking at the candlestick patterns. Am I seeing rejection wicks? Am I seeing bearish engulfing candles? Am I seeing break shift in market structure on the lower time frames? Then that will now make me want to now sell. You understand? So you always determine the trend, establish horizontal level, wait for price to get to that level, then you see how price reacts to that level. In a downtrend you sell, in an uptrend you buy. As simple as that, guys. So I'll go down to H1. What's going on H1? This is what H1 looks like. So nice price action going on. So on the smaller time frames, you also want to establish more horizontal levels that price can react to, so that when price gets there, you now wait and see what price does. Here now I can draw another horizontal level here. Why am I drawing a horizontal level there? Because price respected it here, respected it here, respected it here, respected it here. So there's so many support there that can make this place act as a level of resistance now. So that's a key level that I'll mark and wait and see how price behaves there. So that's it. Now let me show you guys something interesting, because this is actually a pair that I was trading before I decided to make this video. Let me show you. If you go to the weekly now, look at what's going on in the weekly. Weekly is showing some form of strong price action that I'm expecting price to come all the way to this top. Why? Even though we are on a downtrend, why? Because these horizontal levels I have drawn down here, these two horizontal levels, if you look at the previous weekly candle, you see how price actually broke out of these levels very heavily, broke it out with a very strong bullish candle. So I'm expecting to see some more bullish momentum to another next horizontal level, which may act as a level of resistance. So that's why I'm marking out this level at the top here and expecting to see that price will rally all the way to this top, since it has broken this lower horizontal level with a very strong bullish candle. Understand? So that's how you can also do some major analysis on the higher time frame. I told you you can use the higher time frame to get a strong bias on where the market is heading, on where the market is going. So that's what you can do on the higher time frame. Then scale down to the lower time frame and look for your entries. But all this, if you're a beginner, it's best you stick with the trend. So you follow the trend, because it makes it easy for you. I've been trading for a while, so I can understand when the market trend has changed. It's more easy for me to kind of detect when a trend has changed and to start scaling into that trend early. But if you're a beginner, it's best you just stick to the trend, follow the down. If it's a downtrend, you're looking for only sells. If it's an uptrend, you're looking for only buys. So that's it, guys. I hope with this video you are able to upgrade your technical analysis knowledge and find how to easily determine whether you should be buying or selling a market. This should help you at least know what next to do when you open your chart. And this video was actually a request by one of our community members. He asked me that I should do a video on how to analyze the market, and so here it is. And if you want to join our community, I will drop a link in the description below. You can join our Telegram community. I share my trading analysis there. I share all the trades I take. You can also take these trades with me, and I explain why I'm taking these trades, so you can understand why. So guys, I hope this was helpful. If this was helpful to you in any way, please kindly like and subscribe to this channel so you support me, and I'll be dropping more content from time to time. Cheers guys, and take care.